Good day, everyone. Today, we're going to dive into an exciting topic: growth ETFs to own in 2025. So what exactly are growth ETFs? Well, they're a type of exchange-traded fund that invests primarily in growth stocks. These stocks belong to companies that are expected to grow at an above-average rate compared to other companies in the market. The goal here is capital appreciation, rather than dividend income. Hence, growth ETFs can be an essential part of your investment portfolio, especially if you're looking for long-term gains. Now, why are they important? Consider this. Growth ETFs offer a way to invest in a diversified portfolio of growth stocks without the need to research and buy each stock individually. They provide exposure to a broad range of sectors and industries, making them a fantastic tool for diversification. On top of that, they're traded on public stock exchanges, which means you can buy and sell them just like individual stocks. But here's the kicker. Not all growth ETFs are created equal. Some may outperform others depending on the underlying index they track, their management style, and the economic environment. That's why it's crucial to choose your growth ETFs wisely. In this video, we'll be covering 4 such ETFs that are poised to make waves in 2025. First up, we have SCHG, or the Schwab US Large Cap Growth ETF. Next, there's QQQM, the Invesco NASDAQ 100 ETF. Following that, we'll take a look at SPMO, the Invesco S&P 500 Momentum ETF. And lastly, we'll discuss VONG, the Vanguard Russell 1000 Growth ETF. Each of these ETFs brings something unique to the table. They focus on different segments of the market and employ various strategies to achieve growth. And in an ever-evolving financial landscape, understanding these nuances can be the key to unlocking significant returns on your investment. Now let's delve deeper into these ETFs and why they are the must-own for 2025. Thanks for tuning in, viewers. If you're finding this content valuable, there's so much more to come, filled with even more amazing tips, tricks, and inspiration. Make sure you hit that subscribe button to stay connected with us and never miss out. And while you're at it, drop a comment below and share this video with your friends. First up is SCHG, also known as the Schwab US Large Cap Growth ETF. This fund, managed by the reputable Charles Schwab, is a noteworthy player in the ETF arena. It aims to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Large Cap Growth Total Stock Market Index. SCHG is quite a heavyweight, with its assets under management hovering around the $70 billion mark. It's a sizable and well-managed fund that offers exposure to some of the biggest and fastest-growing companies in the United States. The fund's top holdings comprise a who's who of blue-chip giants, including Apple, Microsoft, Amazon, and Alphabet, among others. These are companies that are not just surviving, but thriving in the digital age, and they're poised for impressive growth in the years ahead. Now let's delve into the performance of SCHG. Over the past 5 years, this ETF has demonstrated a solid growth trajectory, outperforming many of its peers. It's been clocking in healthy returns year after year, a testament to its well-curated portfolio and strategic fund management. But performance is just one side of the coin. What makes SCHG a compelling choice for growth investors is its growth potential. The fund's focus on large-cap growth stocks means it's well-positioned to benefit from the growth of the U.S. economy and the global digital revolution. These are companies that are leaders in their sectors, constantly innovating and expanding their market share. With such a portfolio, SCHG offers investors an opportunity to tap into the growth of these industry powerhouses. Another key aspect that makes SCHG attractive is its low expense ratio. Managed by Charles Schwab, the fund prides itself on its cost-effectiveness, charging a modest fee that's well below the industry average. This low-cost approach allows investors to keep more of their returns, enhancing the overall value proposition of the fund. Finally, it's worth noting that SCHG's investment strategy aligns well with the current market trends. With a tilt towards the technology sector, the fund is well equipped to ride the wave of digital transformation that's sweeping across industries. As more and more businesses embrace digital technologies, the growth potential of tech-heavy funds like SCHG only intensifies. In conclusion, SCHG combines a well-diversified portfolio of large-cap growth stocks, a strong performance history, and a low-cost structure. Its focus on the technology sector puts it in a prime position to capitalize on the ongoing digital revolution. Whether you're a seasoned investor looking to diversify your portfolio, or a newcomer seeking a solid growth-oriented fund, SCHG is a worthy contender. With its impressive track record and potential, SCHG is definitely worth considering. Next, we have the Invesco NASDAQ 100 ETF, or QQQM. This is a fund that has been making waves in the investment community for its unique approach to growth investing. So what's behind the ticker QQQM? Invesco, a leading global asset management firm, manages this fund. Invesco is renowned for its forward-thinking approach and its commitment to helping investors build their financial futures. QQQM is a testament to this philosophy, providing investors with exposure to the 100 largest non-financial companies listed on the NASDAQ. Now, let's talk about the assets under management, or AUM. As of our current year, 2025, QQQM has an impressive AUM. This reflects the trust that investors place in the fund and its management. Remember, a significant AUM can often imply stability and longevity, two crucial factors for any growth investor. Diving deeper, it's time we explored the top holdings of QQQM. These are the companies that make up a significant portion of the fund. They include technology giants like Apple, Microsoft, and Amazon. These companies are not only leaders in their respective sectors, but they are also at the forefront of innovation and growth. So, how has QQQM performed? Well, it has shown a strong track record of performance with consistent growth over the years. This is a testament to its strategy of investing in companies that are leaders in their industries and have strong growth potential. But what makes QQQM a solid choice for growth investors? The answer lies in its focus on technology and innovation. The world is becoming more digital and interconnected every day. This trend is expected to continue in the foreseeable future, opening up numerous opportunities for growth. By investing in QQQM, investors get a piece of this growth potential. They gain exposure to the companies that are shaping our future, from e-commerce and cloud computing to artificial intelligence and beyond. Moreover, QQQM offers diversification. While it's heavily weighted towards technology, it also includes companies from other sectors like consumer discretionary and healthcare. This diversification helps mitigate risk, making QQQM a balanced choice for growth-focused investors. Additionally, QQQM's expense ratio is competitive, which is an important factor for long-term investors. Lower expenses mean more of your investment goes towards potential growth, which can make a significant difference over time. In conclusion, QQQM offers a blend of growth potential, diversification, and competitive expenses. It provides exposure to some of the most innovative companies in the world, making it an attractive prospect for growth investors. Remember, investing in growth ETFs like QQQM is about more than just potential returns. It's about being part of the future, investing in the companies that are shaping our world. QQQM, with its focus on technology and innovation, offers an attractive prospect for growth investors. Coming up next is the Invesco S&P 500 Momentum ETF, or SPMO. Let's peel back the layers of SPMO to understand why it's an attractive choice for growth investors. Managed by Invesco, an investment management firm with an enviable track record, SPMO is a fund that aims to replicate the performance of the S&P 500 Momentum Index. This index consists of stocks from the S&P 500 that have consistently shown high momentum characteristics, which simply means they've been on an upward trajectory. As of now, the fund has assets under management amounting to several $billions, a testament to the trust that investors have placed in it. And the holdings? They are as diverse as they are promising. The fund's portfolio is spread across a variety of sectors, including technology, healthcare, and consumer discretionary, among others. This diversification helps to mitigate risk while still offering the potential for high returns. Let's talk performance. Over the past few years, SPMO has delivered impressive returns, outpacing many of its peers. This is largely due to its focus on momentum investing, a strategy that involves investing in stocks that have shown an upward trend in price. The idea is that stocks which have been performing well are likely to continue doing so, and SPMO capitalizes on this. But what really sets SPMO apart is its growth potential. Remember, this is a fund that targets high momentum stocks, which are often characterized by rapid growth. As such, it offers investors the opportunity to profit from this growth. And while past performance is no guarantee of future results, the fund's track record suggests that it has a knack for picking winners. Of course, like any investment, SPMO comes with its share of risks. The very nature of momentum investing means that the fund's holdings are subject to sudden shifts in market sentiment. However, the fund's diversified portfolio and the expertise of its management team help to mitigate these risks. So why is SPMO an ideal choice for growth investors? Well, it offers the potential for high returns thanks to its focus on high momentum stocks. It's managed by a reputable firm with a proven track record. Its diversified portfolio helps to spread risk, and its impressive performance history speaks for itself. But perhaps most importantly, SPMO embodies the very essence of growth investing. It's all about capitalizing on the upward momentum of stocks to generate returns. It's about recognizing potential and riding the wave of success. And it's about having the courage to take on risk in the pursuit of growth. SPMO, with its focus on high momentum stocks, presents a unique opportunity for growth investors. And with that, we wrap up our discussion on SPMO. Stay tuned as we delve into our next growth ETF. Last but not least, we have the Vanguard Russell 1000 Growth ETF, or VONG. The VONG is a remarkable exchange-traded fund that seeks to track the performance of the Russell 1000 Growth Index. This index is recognized as a benchmark for large-cap growth stocks in the United States, a sector that has been a consistent performer over the years. The fund is managed by the Vanguard Group, a global leader in investment management services. Vanguard is renowned for its low-cost index funds and ETFs, and VONG is no exception. With an expense ratio that is considerably lower than the category average, VONG offers investors a cost-effective way to tap into the growth potential of large-cap U.S. stocks. Under Vanguard's prudent and diligent management, VONG has amassed a substantial amount in assets under management. This speaks volumes about the trust and confidence investors place in this fund. The holdings of VONG are diverse, spanning various sectors and industries. It's a veritable who's who of growth-oriented companies, from technology giants to healthcare innovators, from consumer goods leaders to communication services trailblazers. This diversity provides a balanced exposure to different growth avenues, reducing the risk associated with over-reliance on a single sector. Turning our attention to its performance, VONG has shown a consistent growth trajectory. Its historical returns have generally outperformed the broader market, demonstrating the fund's ability to capitalize on the growth potential of its holdings. And while past performance is no guarantee of future results, it does provide some insight into the fund's potential. When it comes to growth investing, it's essential to consider not just the present, but also the future. And the future prospects for VONG are encouraging. The fund's holdings are skewed towards sectors and industries that are expected to drive economic growth in the coming years. This positions VONG well to benefit from future market trends, but what truly sets VONG apart is its focus on growth at a reasonable price. The fund's investment strategy involves selecting stocks that, while demonstrating strong growth potential, are not excessively priced. This approach helps to balance the risk and reward, making VONG a more sustainable choice for long-term growth investing. In conclusion, VONG brings together a diverse portfolio, a seasoned fund manager, a cost-effective structure, and a strategy focused on sustainable growth. These elements combine to create a compelling proposition for investors seeking to benefit from the growth potential of large-cap U.S. stocks. VONG, with its diversified portfolio and strong performance, is a compelling option for growth investors. We've now covered 4 growth ETFs to consider for your portfolio in 2025. Let's take a moment to recap. SCHG, or Schwab US Large Cap Growth ETF, is a strong choice due to its focus on large cap companies with high growth potential. Next, we discussed QQQM, Invesco NASDAQ 100 ETF, which offers exposure to some of the most innovative companies on the NASDAQ. Then, we dove into SPMO, Invesco S and P500 Momentum ETF, a great option for those interested in riding the wave of upward market trends. Finally, we looked at VONG, Vanguard Russell 1000 Growth ETF, a reliable choice for those seeking consistent long-term growth. Each of these ETFs offers unique advantages and potential benefits for growth investors. Remember that diversification is key, and these ETFs can be part of a well-rounded investment strategy. Remember, investing is about making informed decisions. Thank you for watching. Please subscribe, like, and share this video to help spread knowledge about these promising growth ETFs.